Hey guys, what's up? Spenny here. So I have a super exciting company I want to talk about you guys in today's video. This is a company that I've been building a sizable position into, but not just me. ARK Invest is also building a position into this company. This isn't your typical EV company. This is a company that is in a completely different industry, but it's an industry that is growing fast and is taking advantage of the stay-at-home environment. And I think it's one of those companies that's going to be a great hold over the next 10, 20, 30 years. The way the world is going, this company is the best of breed. It's the market leader in this industry. And I gotta say, it has me super excited. And I actually created a little financial model projecting their revenues out to the year 2025. And this is a multi-bagger stock. If they get anywhere near my revenue projections, you're gonna 3, 4, 5 plus extra money in not too long of a time. But really, I wouldn't sell this stock by the year 2025. You wanna hold this one for longer. There's lots of money to be made. So anyways, before we dive into this, make sure to drop this video a big thumbs up. It really helps out. And subscribe to this channel if you wanna see more content like this. And make sure you check out the links down below in the description. I have a Webull link where if you sign up and deposit just $100, you'll get 4 free stocks. Now, with all that being said, the company that I'm talking about is Teladoc Health, currently trading around $194. Now, this company is in the telehealth medicine. So instead of going to your doctor in person, you don't actually need to do that anymore. There's a new growing industry, and Teladoc is the best of breed in that industry. They are the top company. So what they do exactly is that creates the global leader in virtual care across primary, ambulatory, acute, complex, and chronic care, positions combined company to lead the market and set the pace for rapidly evolving healthcare industry, establishes a consumer-centric, whole-person virtual care solution, driving better care for consumers at a lower cost. And right now, they're talking about Teladoc and Livongo, so they just recently are merging together. And basically, this is creating like a superpower in this industry. They're going to be completely dominant in this industry, and they're going to grow really fast. The growth rates that analysts are projecting is quite insane. But carrying on here, you can see that they have 113% year-over-year growth in diabetes members, 125% year-over-year revenue growth, 94% client retention rate. So people who are using the service are mostly staying with it. 94% of them are repeat customers. This is really good. It makes it really easy to grow revenue. And then also they have 75% year-over-year client growth. This is a very fast company, and in my opinion, they are undervalued right now. I think this stock should be trading anywhere around $300 personally. And if you actually look what analysts are saying, analysts have an average price of $240 a share. And remember, we're only at $196 a share right now. So still a lot of room to grow. And we'll get into that in just a second. Now, this is actually a key number to note. So 38% compounded annual growth rate in telehealth market over the next 5 years. This is an important number to know when you're trying to project revenues. So just keep that in mind because I do project revenues later in this video, and I'm gonna go off of a number close to that. So in the past, Teladoc has actually grown at a 67% annual growth, and that was from 2015 to 2020. And now this year, we're growing around 85%. Next year, they have a projected of around 90%. So massive growth. And I think this growth is going to continue for a very long time, but we will inevitably see a slowdown. So my revenue projections is going to be really conservative in my opinion. Doesn't matter though, we're still gonna make a lot of money even with my conservative revenue projections. Now moving on, this chart is actually quite interesting. So this is a summary of their financial forecast pre-synergies. So this is without Teladoc and Livongo forming a company. If they never formed, they were projecting that Teladoc would grow at 40%, 25%, and 26%. Obviously, now that they're merged, the growth rate is going to be way bigger. And let me show you what Wall Street is thinking. So it says here, following the upgrade, the current consensus from Teladoc Health's 5 analysts is for revenues of $2 billion in 2021, which if met would reflect a substantial 126% increase on its sales over the past 12 months. And if we actually go over to Yahoo Finance to see what the 16 analysts are projecting for the year 2021, on average, they're thinking 80%. So whether it's 80%, 112%, it's still huge. I think that they could definitely hit 80%, but anyways, we'll see what's going to happen. Either way, massive growth, and that analyst price target on average is $243. So we're still trading at quite a nice discount here, guys. But in fact, I actually think this discount is a lot greater than what most are currently thinking. So let me show you the little financial model that I built out. It's really simple. It has lots of flaws, but it's just something that's good to keep in mind. Okay, so now looking at my revenue forecast. So I'm skipping a couple years here. So what I'm gonna do is I'm assuming that in the year 2021, we're gonna grow that 80% rate that analysts are projecting. That would bring us to 1.96 billion. And then the next year, if we grow at 40%, that will bring us to 2.74 billion. And that is where I'm starting off with this projection. So you can see here, oh, then also to mention, this is all gonna be based off a price to sales ratio of 15. So right now we're trading at a price to sales ratio of 17. In the past, we've traded at the price to sales of 22, 23, 13, 7. We've been all over the place. So I'm picking a middle ground of 15. And then also I'm gonna have the revenue growth rate set at 40%. So all these years, I'm gonna be predicting that we're gonna grow on average 40%. Now, obviously, some of these years we're gonna grow at 60%, 80%, maybe 20%, 30%. It's gonna be all over the place, but I'm just picking somewhere in the middle that I do believe is conservative and won't mislead anybody. I don't think this is aggressive. I think this is somewhere in the middle. So this is all estimates. It's very unlikely this is going to become exactly true in the future, but you can adjust the numbers accordingly and still come to the conclusion that telehealth should be worth a lot more than where it currently is. Now, let's get into this. So the year 2022, we're going to gain a revenue of about 40%, I'm predicting, and that would bring us to 2.74 billion in revenue at a price to sales ratio of 15. The market cap would be 41 billion, and the share price would be $285 a share. That is not, too much higher than where we are today. And a lot of people do think that maybe right now we're a bit overvalued. I don't think so, and I'm going to show you why I don't think so by continuing on in this model. If we move to the year 2023, 40% growth, we're going to have 3.8 billion in annual revenue. The PS is still 15. Now the market cap is going to be 57 billion with a share price of 395. 2024, everything's the same, 40% growth rate. Revenue is 5.3 billion. PS is still 15. Now the market cap is 79 billion and the share price is 552. So now we're really starting to actually make some decent returns on our money. In 2025, 40% growth. Now we have revenue of 7.4 billion and still a PS of 15. The market cap will be about 111 billion with a share price of 770. Now that would be about a 3x return over the next 3 to 4 years if this all plays out. That's a pretty damn good return on your money. And really this is underestimating the stock's actual potential. I think a lot of these years we're going to see 60 to 80% revenue growth, but it's better to be conservative. And I do think 40% is probably right in the middle of where you should be projecting to still be a bit defensive. So yeah, if this plays out, guys, we're gonna see about close to a $700 share price. However, I do want to be very transparent. The odds are that the share price will be diluted somewhat. So if you add 20% share dilution in there, instead of a 777 share price, it'd be 616. And that would still be a 3x return. And the beauty of telehealth is that this isn't a super speculative position. This is a best of breed stock. So it's the biggest in its industry. And it also meets two very important parameters that I always look for. What that is so proof of concept. So is this concept proven? Does it work? I would say yes, this is a proven concept. It works. It's being used by millions around the world. Another thing you want to look for is the ability to scale. Can they scale this business? Well, definitely. They are expanding into many different countries, so they can scale worldwide if they need to. So I like to see that those two concepts are also being met. So at the end of the day, I really don't see a lot of risk with this stock. I would love to get a 3x return on a stock like this. I actually think it's going to be more like a 4 to 5x, but either way, it's not a big deal. This isn't a short-term play that I'm personally making. I think that it'd be safe to hold this stock for the next 10 to 20 years. This is a really growing trend. We're moving more and more into this digital age where we don't need to see that doctor in person for all of our medical issues. And this is the best stock in the industry right now. So yeah, guys, that is what I have for this video. I'm super bullish on this company. Right now, it's about a 3% position in my portfolio. I would love to make it like a 6 to 8% position though, but I'm gonna keep the amount of money I have and invest in it. But if I see any kind of dips in its share price, that is when I'm gonna buy. So yeah, I'm hoping that the stock goes way down. I would love to buy a lot more shares. But anyways, guys, make sure you comment down below. Let me know what you think of this stock. I would love to hear your guys' opinions. Obviously, I'm very bullish. I think this is a very conservative projection that would get us about a 3x return in 4 to 5 years. I would definitely not be surprised if we see a 5 to 6x return. This is conservative. But yeah, if you guys like this video, make sure to drop it a big thumbs up and subscribe if you want to see more content like this. Thanks for watching till then. I really appreciate that. I'll see you guys in the next video.